Okay, so let me begin. This week, last week of June, last week of the half of this year, last week of Q2. So yeah, it's expected to be a big week. I'll be covering the events to expect this week. Yeah, just a forecast. So let me do this first. Done. Yeah. So I like to look at it like this first to just highlight the important releases. On Tuesday, June 27th, we have the building permits, core durable goods orders, consumer confidence, and new home sales. So these these releases, especially new home sales and building permits, they serve as leading leading indicators of the economy because the situation in the housing sector, like building permits, number of new buildings coming up, and new home sales, number of new home buyers, they work to give a good picture of this current situation of the economy and what the economy is likely to do in the next few months. So home sales, let's look at it. Home sales usually 600k, 683, 670, 640. So if there's more home sales, it means people still have money, the economy is likely to do better. Same thing with building permits. If the permits are a lot, that just means the US economy is doing good and is likely to do good even in the next few months. So yeah, building permits and home sales, these releases that revolve around housing, they work as leading indicators. Talking about durable goods orders, uh, this is a measure of demand. Yeah, durable goods are goods that are meant to last, like orders for long-lasting manufactured goods, excluding transportation items. Yeah. Oh, this is core durable good excludes transportation items. Uh, the other one, the durable goods orders without the core, includes transport items, and yeah, these big purchases are a good measure of consumer demand, which also functions as a leading indicator of the economy. If things start to go bad, people will start to cut on their big purchases like durable goods orders, buying cars, buying electronics, big electronics. Yeah, if the economy starts to actually fail, people will start cutting back on these orders. And here we see the number has been negative. In the previous release, it was a negative, meaning demand is lower than it was in the previous month. And yeah, it's likely to go lower. I'm just saying. So that's it for the durable goods order. And then there's the consumer confidence. This is just a confidence index. Consumers' confidence in economic activity. That's all it is. I keep forgetting to zoom in. Yeah. So consumer confidence in economic activity. Yeah, this is an index that measures that. And the more the confidence, that generally means the economy is likely to do good because people act according to how they feel about the situation. So if people feel the economy is going to do good, they are likely to go out and spend more. So yeah, if once this figure starts dropping to the 90s, that's going to be bad news. Anyway, let's continue. On Wednesday, Fed Chair Powell speaks. So let's go to the Fed calendar. Yeah, here it is. On Wednesday, June 28th, discussion. Chair Jerome Powell, policy panel discussion at the European Central Bank Forum on Central Banking 2023, Central, Portugal. So 9:30 a.m. Eastern Time. This is the time when the US stock market opens. The New York Stock Exchange opens at 9:30 a.m. Eastern Time. GMT time, as you can see, 13:30 hours. So yeah, this is on Wednesday, and even on Thursday there'll be another discussion. Jerome Powell speaking again. Dialogue with Bank of Spain Governor Pablo Hernandez de Cos at the Bank of Spain Fourth Conference on Financial Stability, Madrid, Spain. This is 2:30 a.m. Eastern Time. GMT, that's 6:30 a.m. GMT. So continuing, that was Wednesday. You can ignore this one if you watched the previous video on the recap of economic calendar for last week. Said these numbers tend to fluctuate a lot, so yeah, you can see they tend to fluctuate a lot, so it's best just to ignore them altogether. There's crude oil inventory numbers unless you're trading oil. Thursday, Fed Chair Powell speaks. We've talked about that one. GDP Q1 final reading. This is the final reading of Q1. Let's look at that. Yeah, April 27th, Q1. So this was a preliminary release, another preliminary release, and then now we're expecting the final one. Final reading, of course. Let's look at these ones. For example, the first reading and the final one, there wasn't much of a deviation, but it says a lot about the current state of the economy. Though as you know, the GDP is a lagging economic indicator, so this one you don't use it to predict anything. No, this is just, it ends there. Final reading, once it comes out, it's going to say if the economy is doing good or worse, and yeah, we're going to see how that's going to work out. Then initial jobless claims, and then pending home sales. So this one, pending home sales, together with building permits and new home sales, all under that umbrella of housing data, they work as leading indicators to show what the economy is likely to do in the near future. So yeah, pending home sales. Here there was a big negative, and then there was a flat reading, and then now we're expecting a positive deviation in this one. So yeah, in as much as it is a leading indicator, you can see it's not what can you call it? It's not consistent, meaning the figures, they fluctuate a lot. So that's in as much as it is a leading indicators, in as much as all these housing readings, building permits, home sales, pending home sales, in as much as they are leading indicators, the fact that they are not consistent is why someone like me, when I am coming to look at what to expect in the CPI, what to expect in the NFP, what to expect in the GDP, I might not look at these home numbers. Yeah, I'm not going to look at them because they fluctuate too much, not consistent. Yeah. So, and then Friday, manufacturing PMI for China, GDP for Britain, CPI for Europe, and then PCE. This is where we get the personal income and utility report, and that's where the PCE index is. This is the preferred. Let me change the filter. This is the Fed's preferred measure of inflation, the PCE PCE price index year over year 4.6. Let's look at it. So you can see PCE peaked last year at 6.4 and now we are at 4.4. Yeah, the forecast is at 4.6%, but let's just wait and see how it's going to come out. It is likely that we'll get a reading below estimates, and that's going to be good news for the Fed, because good news for the markets, I mean, because that would mean the Fed might not have to hike rates twice if the PCE starts cooling fast and quickly enough. Also, the core PCE price index year over year, you can see it's still very high, like a very different picture from what we saw in the CPI. The CPI, as you saw it, if it has been falling from 9%, now we're at 4.4%. Yeah, 4%. So that's a big drop. But here on the PCE, on the core PCE, I mean, since March 2022, the peak of March 2022, 5.3%. We are now at 4.7%. It's not a big change. That's why the Fed is kind of saying they have to keep tightening until these numbers starts to fall. Yeah, so that's something that you definitely have to look out for. And then yeah, this is GDP for Canada, Chicago PMI, Michigan consumer expectations, and then that'll be it for Friday. Consumer sentiment. Okay, let me not talk about this one because it's very deep, very long. So let's delete these ones. This week will be the last trading week of the month, quarter, and first half of the year, with the S&P 500 up 13% so far in 2023. Historically, whenever the S&P 500 is up at least 10% year to date, as of end of June, the index ended the year higher 82% of the time, gaining 7.7% on average. So this means where the SPX is currently, the S&P 500, if it's this high at this time of the year, there's an 82% chance that it will end the year green, higher, and that gain is likely to that gain is usually 7.7% on average. So the index is up 13.8% so far, and you can see the average gain when these conditions align. The average gain per year is 7.7% on average. So that's just telling us that this is likely to be a good year for the stocks. Yeah, according to research group from Carson Group. We'll receive more updates on the housing market next week with April home prices, as you have seen, May new home sales on Friday. The Bureau of Economic Analysis will release the Personal Consumption Expenditure (PCE) price index, the Fed's preferred inflation gauge. We'll also get consumer sentiment readings from the Conference Board and University of Michigan, and the final estimate for first quarter GDP, inflation and unemployment readings for the Eurozone will also become available. Yeah, as you've seen on Friday, is it on Friday? Wait, no, yeah, on Friday. There's a CPI for Europe. It's coming out on Friday. This is a preliminary release for June. Yeah. So that's what to expect. And then there's asset classes by total year-to-date return. Bitcoin up 51.9% so far. Stocks are up 13%. This is of course the S&P 500. 13%, gold 5.9%, high yield corporate bonds 5.2, investment grade corporate bonds 3.8, cash 2.1, government bonds 1.2, dollar negative 1.4, commodities negative 4.1, oil negative 9.6. So let me look at this. So government bonds only have a return of 1.2% this year so far, and meanwhile stocks have a return of 13%. That means it's going to be hard for the Fed to fight inflation when the stock market is doing this good. That means it's going to be hard to make people stop spending money. It's going to be hard to make banks to invest in government bonds as opposed to investing in the stock market, because government bonds are just not doing good. And this problem of too much money in the system, remember, it's what caused this massive inflation bubble to begin with. Okay, so let me read another forecast. So yeah, key events in developed markets and EMEA next week, 23rd June. This was 2 days ago. Next, this is now this week. Expect hawkish messaging from the Fed to continue over the coming week, as the case for another 25 BPS hike in July continues to gather momentum. While we remain hopeful on the inflation front, blah blah blah, can ignore that one. So yeah, hawkish messaging from the Fed continued last week, and we'll likely see more of the same over the coming week, with several officials scheduled to speak. The no change interest rates, yeah, we talked about this in the last video, so no need to go back there. The data calendar includes durable goods orders and housing numbers, which are likely to remain relatively firm. The highlight, however, will be Fed's favored measure of inflation, the core PCE deflator. Unfortunately, we don't expect to see any real slowdown, and the pricing for a July hike is likely to build. So this is when I would like to switch the CME watch tool. This watch tool is where we look at the probabilities for the next Fed meeting, what the Fed is likely to do. Yeah, this is it. 28% of market participants are expecting a pause. The chance of a rate hike is still very high. 25 BPS hike, 72%. We're here. So yeah, that's where we are currently. And when the PCE is released, okay, let alone the PCE, when Jerome talks here on this conference and even on this other one, these probabilities are likely to shift. And when the PCE is finally released, the probabilities of course shift again, depending on how the data will come out. Of course, here we're seeing the price index, the PCE is expected to be 4.6% higher than the previous one. If it comes out like this, you can expect the expectation of a rate hike to go higher. Yeah, because if inflation is not cooling fast enough, that means the Fed will have to consider hiking rates again. Yeah, so top 5 things to watch out for in the coming week. US data, Friday release, price index, core rate, inflation numbers, consumer confidence, Case-Shiller National Home Price Index, Eurozone inflation, China PMIs, Russia turmoil. Yeah, this is top 5 things. Anyway, I think we're done here. We've talked about the important stuff. The rest, you can just wait and see what the market is going to do throughout the week, I think. Yeah, especially on Wednesday and Thursday. No, on Thursday and Friday, I might release other videos describing these events. The PCE on Friday and these Jerome talks on Wednesday and Thursday. The discussion, yeah. Let me mention. It's not just Jerome. It's actually all central bankers. The main ones on this is on Thursday. Yeah, you can see. Wait, no, on Wednesday. It's on Wednesday. Yeah. Governor Bailey speaks. Governor Bailey is Bank of England governor. Fed Chair Jerome Powell speaks, and then ECB President Lagarde speaks. So all major central bankers will be having this discussion. At the same time, it's a discussion. So yeah, you can expect some market volatility during this time on across all markets. Yeah, across all markets. So yeah, you just have to wait and see how that's going to work out. Otherwise, there's also an inflation reading for Canada. If you trade CAD pairs, you can watch out for that. Yeah, that's it for the week. Nothing major except for those speeches and the PCE. Yeah, let me stop there.